Get Julia Lee from Bell Direct's views on what we saw on the markets today. Julia, the Aussie share market continuing that rally.
That rally has lasted about 7 months now, so another good day for the Australian share market, and quite a significant one because that 4,800 point level is really going to be a test for the market. If we have a look at the intraday graph for the Australian market, this is the S&P ASX 200, you can see the peak that we saw on the market in the last hour of trade was just 2 points away from 4,800 points. So it does look like that's going to be the next real test for the market. It has been a resistance level for the last month on the Australian share market, and if we do see a close above that, that should be a bullish signal. If we have a look at the themes on the markets at the moment, it still seems to be buying on the dips as well as growth being back in fashion. So today we saw both of those come into play. We saw a move from the defensives back into some of the growth in the cyclical areas. That was great news for the miners. They were boosted by some higher base metal prices overnight. Banks also recovering after their losses yesterday. Banks have had a stellar run in 2009. In fact, Commonwealth Bank up about 80%, and we're seeing the other three banks up around about 50% for the year so far. The bad news was that we saw investors moving out of the defensive areas. So the healthcare sector, the consumer staples, the telecoms and the utility sectors all lost ground today. Wesfarmers was actually the worst performing stock in the top 200 today, down by 1.2%. The high Aussie dollar also is a theme on the market at the moment, and that's good news for importers, especially retailers. So we did see retailers boosted quite significantly. We saw Harvey Norman up by 3.4% today. David Jones gained 2.9%. If we have a look at what may be the catalyst to break that 4,800 point resistance level, I guess all eyes are on the US earnings season, and it continues with more reports coming out of the US tonight. We see Intel reporting tonight, and then later on in the week we also see IBM, Bank of America and Goldman Sachs. So I guess that's the next cue that the markets are going to be looking for to give them some sort of direction. But today, a great day for the market.
Sure was. Now, we did see Clive Peters shares do very well, certainly over the past week. What's behind that?
We have seen retailers in general doing quite well, and that's because of the high Australian dollar, a re-rating of the sector and expectations that the recovery will be much sooner than in Australia than anticipated. So we've seen Harvey Norman up in the last week by about 11%, but Clive Peters has outperformed, rising almost 50% in the past week. Of course, the ASX has given it a speeding fine, but the company is saying it's not aware of any reasons outside of what it's announced for the price rise. And if we have a look at what they're undergoing at the moment, they're looking at a cost-cutting program, about $38 million worth of savings annually, as well as a reduction in inventory to the tune of about $23 million, and launching an online business. Now, Clive Peters is saying it's not really possible to predict what their earnings are going to be in the half year up to the 31st of December. And that's because the December Christmas period trading is so crucial to retailers. So it is a little bit hard for Clive Peters to predict. We have a look at the share price for Clive Peters in 2009. It's been a rocky ride. They, of course, had that scandal with the accounting irregularities where they were forced into a trading halt, but coming back online, saw a sharp increase. And then in the last week, up about 46%. If we have a look at brokers, they are quite positive on the stock. JP Morgan is predicting earnings before interest, tax, depreciation and amortization, EBITDA, of 11.9 million this year, and that would be up from 4.8 million last year. So altogether, a pretty good week for Clive Peters. Seems to be a lot happening there.
Sure does. Now, just finally, those gold stocks outperforming yet again.
Gold is something everyone's watching at the moment, and a lot of that is being driven by US dollar weakness. We can see that in the Australian dollar. If we have a look at the Australian dollar, this is in the last 52 weeks versus the US currency. You can see once again we're at another 14-month high because of that US dollar weakness. And that US dollar weakness is really driving gold prices at the moment as well. And this is gold prices in the last 52 weeks as well, so doing extremely well. In the past, when we saw gold prices reach a record high, it was usually driven because of gold's status as a safe haven. But this time around, it is different. A lot of it is being driven by US dollar weakness, as well as some demand coming out of China as well. Now, that's been great news for the gold miners. We saw them outperforming today. Newcrest mining up by 2.6%. Lihir Gold gaining almost 2%. We also saw St. Barbara Mines gaining 1 cent or 3.1% after its first quarter production report. And that company saying that it's on track in terms of its guidance for the fiscal 2010 year. So that was good news for the stock. And I guess when we do see gold prices at these high levels above 1,000 US now, suddenly it does become profitable for some of the smaller gold miners like St. Barbara Mines to extract gold out of the ground. So good news for some of those smaller gold miners as well.
And good news for viewers too with share market questions. Julia, you'll be appearing a little later tonight.
I've got Todd Kerslake from RBS Morgans, as well as Elio D'Amato from Lincoln Indicator. So if you'd like to ask these guys a question or myself, you can email us or call in at 8 p.m.
Looking forward to it. So that's 8 p.m. Australian Eastern Daylight Savings Time. Your Money, Your Call with Julia Lee. Thank you so much for that.
Thanks, Brady.